Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the money maze. And today we are diving into a company that just went public in IPO, a big deal for any company, because it means they are selling shares to all of us, and it gives us a chance to hop on board early, or maybe just watch from the sidelines. So what we have here is a Form 8K filing. This is like a bulletin board for public companies to announce big news that investors need to know right away. Think of it as the company's instant message to the world. And this particular 8K is all about the initial public offering or IPO of ITHAX Acquisition Corp. III. The big news dropped on the 15th of December, which is when this whole IPO party really happened. But the report itself is dated the 19th of December, giving us a few days to digest what went down. This company, ITHAX Acquisition Corp. III, is what we call a Special Purpose Acquisition Company, or SPAC. This means it is basically a shell company created with the sole purpose of raising money through an IPO to buy another company later on. They don't really have products or services, yet they are essentially a promise and a pile of cash looking for a good deal to invest in. Now let's talk about what they sold to raise that money. They sold what are called units, and each unit is a package deal. It includes one Class A ordinary share, which is a piece of ownership in the company, and half of a redeemable warrant. Now what is a warrant? Well, think of it as a coupon that gives you the right to buy a share of the company at a set price. Later on, these warrants are really interesting because they can become value. Able. If the company does well, where did these units get traded? That's right on the NASDAQ stock market, LLC, a pretty big stage for public companies. And a heads up for us investors, this company is what is called an emerging growth company. This means they get some leniency on certain reporting rules, which can be good for them. But we always need to keep an eye on things. The main event here is the IPO and subsequent private sales. The company successfully sold 23 million units, which generated a massive $230 million. That is a huge amount of money right out of the gate. They also had some extra sales of warrants in private deals. The sponsor of the company, ITHAX Acquisition, sponsor the third, ILC, bought warrants, and so did the underwriters Canterfeit. Zudreld & Co. This is pretty standard for SPACs, as it helps ensure the deal goes smoothly and gets them extra capital. Now, where did all that money go? A whopping $230 million was placed in a trust account at JP Morgan Chase Bank. Nah, this is a crucial detail for SPACs because this money is meant to be used for acquiring another business or return to shareholders. If they don't find a suitable target within a certain time frame, this trust account is like a safety net for investors. They also included an audited balance sheet that is basically a snapshot of the company's financial health at a specific point in time, showing what they owned and what they owed right after the IPO. And those private warrant sales, this is important because it shows the immediate impact of the IPO on their books. The filing also lists the exhibits which are supporting documents. The most important one here is Exhibit 99.1, which is the balance sheet we just talked about, and Exhibit 104, which is the interactive data file for the cover page, so the computers can easily read all the information. And finally, we see the signature block here. We have Orestes Fintiklis signing off as Chief Executive Officer and Chief Financial Officer, dated the 19th of December 2025. This tells us who is officially responsible for this filing, so looking at this filing from a Warren Buffett perspective. What does it all mean? Well, it's a classic SPAC eye. PO. Announcement: ITHAX Acquisition Corp. III has successfully raised a significant amount of capital. This is the first step for them to find a target company to merge with. The key thing to watch now is what company they choose to acquire, and how well that acquisition performs the money in the trust account is a good sign that they are serious about protecting investor capital. However, the success of this SPAC really hinges on the management team's ability to find a valuable company to buy and integrate it effectively. Investors are essentially betting on the management's deal-making skills. Right now, there are always risks with SPACs, like overpaying for a target or the target company not performing as expected. But for now, the foundational block is in place, a lot of cash ready to be deployed. The direction of the company is entirely dependent on their upcoming acquisition strategy. Alright, that is our breakdown of this 8K filing. What is your take on SPACs and what we saw here? Let us know in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord link in the description to join our community and keep the conversation going. Thanks for watching. See you next time.